There are dozens of technical analysis indicators for trading, and each one serves a specific purpose. Some measure momentum, others track volume patterns, while others identify potential trend reversals. But you cannot hope to use all of them. Just so you know, there's no single best indicator, but there are a few best indicators for every individual. The best indicators for you are the ones you understand their inner workings and they align with your trading style and strategies. The key is selecting the right combination of indicators that complement each other and perform well for you consistently. When I started trading, I had almost every indicator you can imagine on my chart. RSI, MACD, Bollinger Bands, Stochastic. It looked like a Christmas tree. But the crazy thing was that they all screamed different things at the same time. One said buy, another one yelled sell. I was trapped in analysis paralysis. So I took a bold step to remove them all and focused on just three simple indicators that dominate every market. So whether you're trading Tesla stocks in the US or Dangote Cement, MTN Nigeria in the Nigerian Stock Exchange, these three indicators work the same way. The language is universal. It's all price action. And yes, you can also use them to trade Forex, crypto, futures, or options. So in this video, I'll reveal the top three technical indicators that dominate both the US and Nigerian markets today. So if you're looking for indicators to use as a beginner trader, or you have been struggling with which indicators to use in your trading, then these indicators are a good starting point for any trader. They're not only powerful indicators that have stood the test of time, they are also simple to understand and easy to use. Individually, these indicators are useful, but when you use them together, they create a powerful confluence that helps you cut right through the noise. And here's the fun part. You've probably been using at least one of them completely wrong. So make sure you stay till the end because I'll be showing you a live combo setup that pro traders quietly use to time their entries almost perfectly. So without further ado, let's dive in. The first and most important indicator is the candlesticks. Before you even think of adding indicators, make sure your chart is displaying candlesticks, not an area chart, not a line chart, just candlesticks. Why? Because every candle tells a story. So first, this is how to change your chart to candlesticks. On TradingView chart page of any asset, click on this button right here at the top and select candlesticks from the drop-down options. And you can do this on any other trading platform as well. Now, these green and red bars you see on the chart are candlesticks. Candlesticks tells you all you need to know about price. Each candle reveals four things: the open, close, high, and low price, and together they show the battle zones between buyers and sellers. For example, you have the bullish engulfing candle that looks like this here, and it means that buyers just took control. And this here is a doji, which signals indecision. And when you see a hammer like this one here, that's the market shouting the bulls are back. And so you would expect to see price reversing from a downtrend to the upside. So these candlesticks are your price storytellers. They communicate what is happening in the market in real time. It reveals market sentiment, reversals, momentum, everything. And traders use these candlestick patterns to identify opportunities in the market, like major support and resistance levels where you have buying or selling pressure, price continuation or reversals, or where the market pauses due to indecision of buyers and sellers. Even if you trade using only candlesticks, you would already have an edge over 80% of traders. But here's the catch. A candle's message is only half the story. To know how strong that move really is, you must look underneath the chart, and that's where our next indicator comes in. The volume bars, and here's how to add it to your chart. Again, on TradingView, if you click on this indicator tab up here and then type volume in the search box, from the list of options, you can select this volume indicator here, and it will display the volume bars at the bottom of your chart, just like you see it on this chart here. You can get it on any other trading platform you use, although it may display in a different location, so just take note of that. So this green and red histogram bars at the bottom here, that's volume. The volume bar indicator is often overlooked, and at first it may seem like it's not needed on your chart. But if you learn to use it correctly, it can give you the extra confirmation you need to take trades with confidence. These volume bars show you how many shares or contracts were traded in that specific candle period. So if you see a high volume like this long bar here, it means there's strong participation and traders are piling in. And this is usually followed with big price movements, like you see in this big price move here. And when you see low volume, like this small bars here, it only means few traders are participating. So there's low activity, and this gives the signal that the market is slowing down. It's taking a nap. You'll notice the biggest movers in my monthly stock reviews, like NVDA, Tesla, or even GTCO, Dangote Cement, MTN, always move with massive volume. So volume doesn't lie. It exposes where smart money hides. So when you see a price breakout and it is backed by increasing volume, that's usually a confirmation signal. When volume is drying up near resistance, then we expect to see a pause, a consolidation or reversal. So price shows you what's actually happening, while volume explains why. And that's why these two, price and volume, are the foundation for every other indicator out there. But guess what? Price and volume alone can't show you the overall trend direction. And for that, you need the market's compass, which is the moving average, the third indicator. To add the moving average indicator to your chart, you click on the indicator tab here again and type in moving average in the search box. You'll see all the different moving averages, but the popular ones are the simple moving average and exponential moving average. So when you select either of them, you'll see the lines appear on your chart. Now, it's important you know the difference between the simple moving average and exponential moving average, because some traders prefer to use the simple while others prefer to use the exponential. There isn't any more difference, only that the simple moving average has a greater lag, which delays signals because it gives equal weight to all prices, both old and new, and reacts more slowly to price changes. While the exponential moving average, on the other hand, has a shorter lag, which allows it to detect trend changes more quickly because it gives greater weight to recent prices, which makes it more responsive to price changes. So it really depends on your preference. I personally prefer to use the exponential moving average, which is what I use all the time. Now, you want to go to settings to change the length of the periods to 50 and 200, and to also change the color of the lines to differentiate them. So we change the first length to 50 period and the color to yellow, and then go to the second line, settings, change the length to 200 and the color to blue. But whichever color works best for you is fine. So the moving average is your trend compass. It is simple, powerful, and easy to understand. It allows you to easily see the bigger picture clearly. Like in this chart, you can see how price is moving in an uptrend here and moving in a downtrend here. The main signal is the crossover. When you have the 50 EMA cross above the 200 EMA, that's the golden cross. It suggests that the bulls are taking over. And when it flips and crosses below, that's the death cross. It suggests the bears are in control. But remember that moving average are lagging indicators, so they only confirm the trend, not predict it. So smart traders usually pair them with price action and volume. And let me give you a quick pro tip. Check the trend on multiple time frames. For example, use the 1 hour and daily time frames together. If both align, you've got a confirmed trend. And that's how you avoid false breakouts. Even in the Nigerian Stock Exchange, this combo works beautifully too. On either GTCO, OANDO, Boa Foods, MTN, whichever one. Once you spot a crossover, confirm with strong volume, then you ride the wave. Now, just imagine combining all three indicators, candles, volume, and exponential moving average, in one confluence. That's where the magic happens. When you see a bullish candle form near a high volume zone and your EMAs are pointing upwards, that's your sniper entry. So you have the exponential moving averages confirming the trend, the volume giving you confirmation signal, and the candlestick telling you it's perfect timing to enter the trade. This is how the pros align their trades. Once you start seeing these setups, trading stops feeling like you're guessing. It becomes data driven. And remember, you should never use indicators in isolation or overload your chart. Focus on a few that align with your strategy, test them, and trust your process. So whether you're trading Tesla stocks from the US or GTCO from Abuja, or trading Forex from your laptop in Lagos or Germany, or crypto from Canada or UK, these three indicators speak the same language, and that is price action. So if you found value watching this video, please like, subscribe, and drop a comment below with your favorite indicator. And if you want me to show you how to combine these three indicators with price action trading strategies, that's coming up next week. So try not to miss it. And I'll see you in my next video. Bye.